It's funny how it took 1, 2, 3, 4, 5, 6, 7 days to finally have this correction, which is just around 3%. It did it in one day here. This was less than 2%. All these were less than 2%. This was just over 3%. So that's pretty much been the correction theme this year is, pretty much contained by 3%. So we will see what the 50-day looks like from high to low if we get there, today or even early next week. But that's a 3.68% correction, which actually would be one of the biggest corrections since the bottom was in April. So we'll see. NVIDIA, I was doing a private session last night. I was wondering if NVIDIA, which peaked around 212, is now at 184. That's decent. That's a 11+% correction on the largest company in the world. We're under 5 trillion now, 4.57. So that celebration of 5 trillion was short-lived for right now. And is this bringing the mags with it? Let's see. Mags down to the 21 period, gapping lower, possibly very similar to the indexes. Are we pushing down into the 50-day moving average? Are we going to find support off these recent lows? So hopefully the market's not going to limp in for the rest of the year. It'd be nice to find some stability here in November and get some animal spirits into the end of the year. And I just give it all back. All right. Chat should be open for everybody. See who's in the house this morning. Paul's here, Greg's here, Mark's here, Ted's here. What's happening, everybody? We do okay yesterday. Nice win on daily profit play. Nice win on daily double up. I was tracking double up through the afternoon. It actually would have been a loss if you held the thing all day. Here we go. So recap, I thought this was interesting. Daily profit play was a winner for the day. Dollar credit took 55 cents out of it. That's a pretty good win considering I'm usually happy with 70, 75 cents for a debit. So anyway, price tested the put side. We had a 67.15. We had lows at 67.10. I thought we did a pretty good job of letting the daily profit play indicator help us determine the low for the day. We calculated out based on that, 18 plus VIX, and then we saw the VIX was rallying all morning. So be mindful of the VIX going up to 19s and 20s. And I think I deleted it on my chart, but the screenshot from yesterday, let me find it here. Hopefully that screenshot shows my text. All right, check this out. Here is our ATR tracker from yesterday. Took a screenshot. 67.10 potential bottom, and our low was 67.07. So between the indicator VIX box as well as the, our calculation in the morning, it's kind of nice that, with a high degree of confidence, you can kind of guess where your lows are at for the day, highs of the day, and trade with them, trade around them. So I didn't make an official group trade out of this, but I did sell a broken wing butterfly at 6,700 yesterday. I did a 6,700, 6,695, and a 6,685 or 80. But it filled me for 70 or 65 cents on one and then $1 on the other. I just did two contracts, so one for 65, one for $1, and ended up grabbing 60 cents out of the 65 and 95 out of the $1. I closed those as price went back up here towards 67.50, 67.60. They were trading for pretty much 5 cents. So no profit trap needed. Price didn't go any lower. That was a good thing. And all in the day's work, I guess, huh? Could you allow you can, but do I? No. And this is why I track this stuff in Telegram. So a couple posts I want to review. Here is a double up. So we took the trade early in the morning, and the early morning trade offered up a quick $50. Slightly, after we wrapped up our session, it was offering over $100. I just did some updates here in the afternoon. Usually, if I can see, one or two in the afternoon, a couple $100 of profit, more than 100% return on the risk of that double up trade. Here's 245 in the afternoon. The double up trade from the morning was offering $500 profit. So it was it was a 190 risk. Okay, a 190 risk, and you're up 500 bucks. Now, yes, you had to wait longer, but that's a 263% gain on that risk. That's great. It's not a bad spot to protect. And it's 245. You're not holding it close. 328. Okay, you're up 650 bucks. 331, you're up $720. At 339, this is what I do is I watch this stuff all day. At 339, you're up $835. Okay. Now, closing bell, because price slipped lower and settled at 67.21 was the close. That was a 1960 debit. Remember, the trade was an 1810 credit. So if you had an 1810 credit, it cash settled for 1960, you would have lost 150 bucks. So double up trades, butterfly trades, I like to manage them during the day. In a 0-day environment, I'm going to manage them during the day. So if you have the trade open, anytime I'm up 200 plus percent, I think I'm silly not to take the profit. Yes, I can be up 300, 400, 500%. We've had a couple that we've had over 400, 500%. But that's luckier than expected, because when the profit trap is filling late in the day, that's awesome. But it also is really slippery, like it was yesterday, where just another push, 5 or 10 points higher or lower at the close of the day might slip through that center price or might slip through that profit trap. And just like that, $900 of profit. I saw this debit at lower than $9. We took an 1810 credit. I saw the debit for less than $10 briefly. So there was like an $800 or $900 winner there. And anyway, that's great if you manage it. But if you let it cash settle, that would have been a loss yesterday. So I think the idea is you want to manage profit. The risk is always really, really small and very manageable. I mean, max risk yesterday was 190 and upwards of $1,800 of profit. So 1810 was max profit out of a 190 risk. You have a 9.5 to 1. So the chances of getting 9.5 to 1 are very, very slim. But the chances of getting 1 to 1, 1.5 to 1, 2 to 1, if you're getting, that trap in any way within, we did a 20 wide yesterday, which when you take the trade early in the morning, you generally get about a 30 to 40 wide profit trap, and it's going to be partial profit that's offered. So anyway, point is you've got 9.5 to 1, which is great, but you can still manage like a 1 to 1. Even 50% return is great, but a 1 to 1 or better is awesome. A 2 to 1 is fantastic. Anything above 2 to 1, you'll love the idea of making these winners a lot bigger. So, David, to answer your question, I don't like to let them just automatically go to the end of the day, because that's assuming a lot. That's assuming that, I picked a perfect level that the price is going to stick to all day. It rarely happens. Okay. Even if I pulled up something like this, okay, even if I pulled up this and we had one gamma level, which we kind of do today, like price is going to find 6,700, right? It's probably going to gap lower to find it anyway. Let's say that this is the only gamma level that I see this morning. I still don't put a butterfly trade and hope it's going to hit there and stay there all day, because it's just dynamic. It's going to be part of price action. It might, bounce off of it and never see it again. It might go through it and then come back to it, but may not stay there. So anyway, point is, risk is small, manage your profit. That's a pretty fun process, to be honest. If you've never had a strategy where your job is to manage profit, maybe consider it, because we spend most of our time managing risk, which is obviously important. But when you're taking small risk trades like a double up, it's enjoyable to manage profit. It's definitely a switch, right? Okay, so that's where we're at. VIX is high. We're negative gamma. We've got some levels to the downside. We're opening probably 0.4+% lower. So we're gonna have another lovely day to the downside. At least starting out, we'll be below 6,700. So the question is, where's that at relative to our ATR levels? Let's get up our indicators here for daily profit play. Let's go daily profit play here. Let's get our VIX up. Okay, so we're over 20. Another sell off today. It's like, are we going to see a VIX continuing to elevate? This is a pretty important spot. We saw it here with the rally up to 20, suppressed back down to 15, up to 20, suppressed back down to 18, up to 20. If the VIX is going to climb, I'm not going to force a premium sell today as far as like going out to, maybe December, January, selling below April lows. I think I can get a much better price and a lot better credit if the VIX is up into the, maybe 25 to 30 area, which not that long ago we were up to 28. We are still in the government shutdown. There is no data, right? Today's the 7th. We were supposed to have non-farm payroll. We didn't. No news, right? So CAD had news. They crushed it. We have sentiment this morning at 10 a.m. for the U.S. I'm sure it's going to be awful. Let's look at see if there's a chart here. I mean, U of M sentiment, we are at some pretty terrible lows. I mean, we're going back to like bear market lows in 2020. That's where our sentiment is at. I know it's just a number. I think I posted this yesterday in Telegram. Yep. So here's our AAII that printed on Wednesday. The bulls retreated by 6%. The neutral camp climbed quite a bit. We went from 19 to 26. So we're either seeing a lot of people hesitant, peeling back the bullishness. The bearishness has really just stayed. So we just have a huge neutral camp right now, which would make sense when we see a lot of stocks that are in between the 50 period and the 200 period. We don't necessarily have a death cross. We don't have a ton of bear market confirmation. Granted, the market breadth isn't great, but historical averages, bulls 37.5, neutral 31, bears 31. So right now we're still slightly above average on the bulls. We're just under the neutral camp, and the bears are still elevated. We did talk about the NAAIM, which is when we see this thing get up to about 100, we typically see some pullbacks come into the market. That actually happened here. So this printed 100.83, and we're getting a pullback in the market, which is what I thought. On top of the technicals, which was, hey, I think we hit the 50 period moving average, which we're getting closer. Let's see here. James says 67, 10, 20, 30 for the fly. It was up to $9. Yeah. Yeah, good trade, man. Go out there and catch it. I love it. All right. So workspaces are all up. There's 5 minute. Keep an eye on this trend line. If we are going to continue to stay in negative gamma and stay on the left side of this trend line or below this trend line, the bears are in control for right now, not the bulls. Okay. It's just one day. I recentered the daily profit indicator here at 67.20. VIX is at 20.55. So let's do the numbers on that. Got about a 1.28% move. 1.28 gets us around 66.35. Potential bottom, and that's VIX at 20.56. Okay. So if the VIX is higher than 20.56, that VIX box may or price may go a little bit lower. Okay. So again, if the VIX is going up, be careful on calling the bottom. Okay. We're going to be gapping lower today. So I will also take this one step further. If we gap lower, to kind of respect the extremes, if we gap lower and then I still look at a 1.28% move. So let's say we gap 0.4. Futures at 0.45 right now. So we gap like 0.4% here. Okay. So we're right around the 50% ATR upon the open. I'll still measure that with the VIX. So I think, again, being conservative, but probably like a 6605, 6600 potential bottom with VIX at 20.56 plus gap lower. Does that make sense? So in other words, I'm not trying to call the bottom if I'm going to, trade off it and defend it, right? To the same token, if we are here at the open, we're unlikely going to get back to 6,800. I think that's a pretty safe top in the day. If we're gapping lower, okay, if we're gapping lower and we go 1.2 something percent, the VIX should retreat. So we shouldn't necessarily hit all the way up to these levels. So unless we have like a monster move today to the upside, we shouldn't be super surprised to see it, be below probably 67, 70 or so. So with the gap lower, again, safe play is going to be like 6,800 highs, 6,800 potential top. That's based on the close. If we're gapping lower, then we'll get that like 0.4 gap. The 66.91. Then we go up about 1.2 and change. 67.75, 67.80 would be potential top. Fixed at 20 dots. So it's moving up a little bit higher. 20.59 plus gap lower. So it's going to move this top a little bit lower. So to be, I'd say higher probability is this is the top that I play today, and this is the low that I play today. Again, the low is not entirely safe if the VIX continues to go up. So if the VIX is at 21, 21 and a half, 22, this low isn't necessarily safe. Okay. Start from the gap, look at your VIX, divide it by 16, move this thing down, and that's where I think the low will be. Right. I don't know what's going to happen today, but I certainly don't want to put a trade in that's going to be like, oh, let's go ahead and just, stay in the way. If it's going to be a volatile day, I don't know. We we might see some excessive pain that we haven't really seen. It's been like a slow bleed to the downside. We really haven't had like an awful day. October 10th was an awful day. It was like it from opening to closing bell. So if we're gapping lower with a strong push to the downside and the VIX is going to rip from 20 and change to 25 today, I mean, just be mindful of that stuff. Okay. All right. Food for thought. It's on the indicator, Don. So if you are a member of my daily profit play, I have a daily profit play indicator for you. So if you're a member, it's inside the classroom. There's a trading view indicator and a thinkorswim indicator for it. Okay, then I've got gamma. Let's bring up our let's go real time. Okay. So weird. Oh, okay. Let's go real time. Here we go. So for a Friday expiration, 0 day, I don't have much below 6,700. Now, that doesn't mean we can't go lower. Obviously, in real time, we might see some of these, other levels fill in as we go to real time gamma in the next few minutes. So this isn't real time yet because the market's not open for SPX, but pre-market showing there's at least a put wall around like 67. So if we gap lower today, of course, I'm asking if we gap lower, does it stay there? Do we gap lower and try to fill a gap? Do we kind of, put the low in for the week and then stabilize off of that? Is it, I don't know. Your guess is as good as mine, but I do know that with a fairly high degree of certainty, we calculate out a couple levels here. We shouldn't see price going too much lower than these levels or too much higher than these levels. Okay, we've had a good week so far. I certainly enjoy winning the days when it comes to daily profit play. And even though it's been a pretty volatile week, we had a lot of intraday swings. We've had some decent amounts of price action flows. The week was not super light. I mean, volatility wise, this is our week, right? So Monday, directional, very directional, but pulled back and market makers did their thing. Tuesday, very directional, market pulled back, did their thing. Wednesday, directional, and still pulled back and did their thing. So like market makers won the day, won the day, won the day. Yesterday, they did not. It was directional, centered. Okay, even directional for the day. It was neutral here. Like even when we got down to this high to low, it was inside the market maker range with this little close, but they let it slip late in the day. So, the plus minus was about 37, 38 points when we started the day. They ended up letting the markets go from about open and close 60 points. So market makers didn't do the job, but that's what I said here in the recap yesterday is that we did. Okay, we did our job. We grabbed a nice profit out of daily profit play. Let's see. Shared some just must-have trades in my practical options. Did a workshop on that last week. I also was in this AI summit. I'm in this like 3-day AI conference. I shared a chat GPT prompt that can help you do like a very simple outline of any of these strategies. So you can basically, copy my prompt and just add in, in my broker platform, if I have Tasty Trade, if I have Thinkorswim's platform, if I have Webull or Robinhood or Fidelity or E-Trade, you can tell, Chat GPT to explain to me like I'm 14 years old a long call or any of these spread trades. And it was kind of cool. They just laid out like the trade itself. It gives you an example where price is at, how to trade it, what it looks like, gives you a screenshot of a broker platform. So if that just helps kind of reinforce the teachings that I have in my practical options, like great reference point for me to share. Okay. All right. So we are 2 minutes away from the open. VIX up to 2060. No news on the day. We do have the 50-day moving average not that far below. I'm curious if the market finds it and offers any type of support today. Maybe it does. If it doesn't, well, things aren't looking great. If we get below the 50-day moving average with some movement towards the next level, we take out that October 10th low, we get to that 100 period. That's not a good look for the market. It's not a deal breaker, but it's not a good look. So I think if we're going to see, this aggressive bull market stay intact, we got to hold this 50-day. If we don't, it's going to get a little bit messier. We could still rally back up, NVIDIA earnings in whatever, a week or so. I think it's the 19th, maybe. NVIDIA earnings on the 19th. So that is 2 weeks out. I think their earnings are typically on like Wednesdays or Thursdays. Pre-market NVIDIA is down $4. So we got a small gap lower here. Stuck mags for a moment. So NVIDIA down 2%. Mags down 0.8. Apple pre-market lower. Amazon pre-market lower. Broadcom pre-market lower. Google pre-market lower. I'm saying this because these are the biggest stocks in the world. Meta, we have a 610 by 615. It hasn't been filled yet, but that's a bull call spread that we're looking for. Microsoft, a little bit softer. Netflix, we're looking at a 1070 by 1075, still hasn't been filled. This split goes into effect, I think, the 17th. Yep. So Monday the 17th, so not next week, but the week after, we're going to see a 10-for-1 split on Netflix, which will bring this stock down to about $100. NVIDIA down pre-market. Tesla down a little bit pre-market. Bonds catching a safe haven bid, kind of. 10-year yields sticky. All right, let's get after it. So we opened up, pressure to the downside. VIX at 20.16. I'm going to see, now again, we gapped lower. I'm going to be conservative here. I'm going to look at like the 6,600 zone, see if this will fill for some premium. Okay, now again, if I take that trade, I'm probably going to look at a broke wing butterfly with that profit trap opportunity, even though, let's go to the 7th. So gap lower, crossing 67. Yep. All right, we're pushing a little bit lower towards the 50-period moving average. Here's my real-time gamma. So we have this. We're at the 50% ATR, and then we have 100% ATR on 66.50. So we shouldn't see price pushing all the way to the VIX box low. I'm just saying that's my, you know, high probability calculation that we shouldn't go too much lower than like 6,600 today. VIX has jumped up from 2060 to 2084. Again, refresh the numbers. 2084. Now we're talking about a 1.3% move. If you take the open here, go 1.3%. It's around 6605. Okay. What is that percentage wise from the previous day? 6605 is around 1.7%. I'm going to put in a broken wing. 6,600, 95, and 85. I'm going to see if this will fill for $1. I don't think it's going to, but if it does, that's a pretty great dollar to have because I think it's a high probability trade. Hopefully the VIX doesn't just blow up all day, but we'll see. So I'm going to put this trade in for $1. Keep an eye on it. Now let's see if market makers can do the job. So look at the option chain. Current levels on the call side. I might go a little bit higher delta on the call side, but not too much higher. 13. So 13 delta, and then let's see what a 10 delta looks like on the put side. 6,600. I already have it off fudge. Well, let's see. If I did 66 here, wow. Uh, 66.45. That's back above the gap level. 50% ATR, 57. All right, that's not a bad trade. Let's see if we can get $1.10 for this one. $1.05. If I get $1, I'll still take the trade. All right, just got filled for $1 for daily profit play. Trades going in, alerts coming in. SPX 11.7. I'll make sure I type the numbers in correctly today. 45, 50, 6,600, 60, 595. Okay, trades in. I'm going to modify that broken wing to make sure there's no conflict there. So if I do the 6,600 sell, okay, I need to remove this butterfly and think of another trade. So I'm going to do trades in here on the standard daily profit play. I will go here for a butterfly, skip. Maybe we can pull. Let's see. That's quite a ways out there. Okay, I'm going to try this one for $1. I'm just looking at my profit trap. If I'd have to go 10, 66.10, 66.05, and then skip to 90, which is a good broke wing butterfly. Right now, the trade's offering 65 cents, which, again, I'm risking 9.35 or 9.40 to get that 60 cents. So I don't like that trade. I try to ask for like $1.50 to $2 on this position. And then you have about a $7 buffer. So this would be, taking prices down to like 65.98 would be essentially your break even. So I think to be safe, I'm going to try to catch this thing with a little bit of a buffer here. Do my broken wing butterfly out this way. So 90, 85, and 70. If I can get filled here for $1 not bad. $1.50 is a little bit better. I'm going to try $2. I'll try $2. That gives me a, break even of around 65.78, which means the VIX would have to continue to go up all morning. So I'll see. All right, we'll keep an eye on that. So I'm not calling the bottom based on the VIX box. I'm calling the bottom based on the gap and potentially this push into the VIX, which is around 21 now. Okay, so again, do the numbers. 21.14 divided by 16, 1.32. That 1.32 from the open could put us into that 66.05. Okay, so just it shouldn't want to stay there. Okay, hopefully there's a little bit of bounce there for the day, but it still means that price could test or get there. Right? So our put side was the 6,600, 65.95. I'm hoping that stays safe for the day. All right. So trade is in. Let's go 11.7. 0.4. What was that gap lower? Like 0.4, 0.45. So close here, about a 0.43% gap lower. VIX rallying from 20 to over 21. Calculating levels. We'll see how this plays out. Okay, so any type of movement here, we're getting an immediate direction. If this stabilizes and comes back up, our daily profit play should be looking very good. Okay, I did a slightly higher delta on the call side. I think I started at 35 or 45, a 45 by 50. So let's go here. 45, 67.45 is here, and 6,600 there. So if price can stay inside this area, again, it doesn't have to be there all day, but it has to just stay here for some duration of the morning. If we get like a 60-minute pause around current levels, because you can see we're pretty centered here. If we get a 60-minute pause, then we should be able to see some profit this morning on daily profit play. Meta just got filled for a 240 debit. So that little bonus trade, let's see what happens. Meta got filled. This trade is out to December. So I'm giving it time. This is a bull call spread. This is a bonus trade. Okay. So bonus trade, and I'm going to go ahead and put in a take profit. So 10 by 15, paid 240. Let's go after a $1.20. So I'll put a close position at 360. So I'll go after a 50% winner. Yeah, the broken wing is I'm trying to go below. So I did a broken wing butterfly bonus trade, SPX 11.7. I'll put it in the Zoom chat. So I'm buying the 66.90 put with one contract, selling the 66.85 put with two contracts, and then buying the 66.70 put with one contract. I'm going after $2 credit pending. Okay. I'm okay with $1 to $1.50, the $2 credit on this trade. So a $1 credit is max risk of $9. $2 credit, max risk of $8 on that setup. So it's not favorable reward to risk. If price blows through the downside today and just blows through the floor, then there's risk in the trade. But we shouldn't necessarily do that most of the time. Like high probability is we can kind of call the bottom based on the VIX box, and unless the VIX, and this is the thing we don't know, if the VIX continues to go up all morning, we go to 22 VIX, 22 and a half VIX, 23 VIX, then that low is not necessarily safe. Okay. I still hope that there's like some reflexive rally off it. Like there's a bounce today, there's a floor today, something like, hey, we hit the 100% ATR and the market bounces. We hit the, kind of daily measure move and the market makers actually contain it. So there's forces that would help us get this trade back into profit. Okay. All right, that meta trade Beatrice, I'm not that worried about it. It's out to December. If the market's going to have any, lift at the end of the year for animal spirits, we should be fine. But I'm just going to go after an easy 50% take profit. So in for 240, I'll close it out at 360, grab a $1.20 out of it. If price rallies back up, that should be a pretty gettable target. Okay. All right. So we have 1, 2, 3, 4 for daily profit play. Right there. I'm going to try to grab, I think we got a pretty good looking trade. Let's try to go after another like 55. That's been a pretty fun profit target. Anything below like 75 or 70, totally systematic. Just take the profit if you want to, especially if you're trading bigger contracts. I'm just going to go after 55 and give it 45 to 60 minutes and see where we're at. If price is not just, blood red the entire way down, if we have some green in here, we have a directional move, some stall, and we go back, green and neutralize, then our trade should be looking very, very good. If it's red all morning, then we're going to ride this out a little bit and hope that our low is pretty safe. Okay. Also, keeping an eye on the VIX. Okay. We're at a 21.28 now, 21.28. So 1.33% move. Okay. Again, I'm being conservative here. 1.33% should be right around this box from the close, right? That's how I designed this daily profit indicator. I am being conservative and using the gap lower and the 1.33, which again puts us right around that 6,600 handle. So between our put side of the daily profit play and even below that, a buffered broke wing butterfly, I shouldn't lose on the trade unless the VIX blows me out, right? If the VIX runs to 25 today, then the bottom's not safe. But if the VIX reverts at all, we'll be fine. Your broke wing butterfly is in the money. No, it's out of the money. Gosh darn it. Is it 65s? I did that again. Sorry. Don't take that broke wing button. How the... I guess when we're slipping hundreds of points, I get the numbers wrong. All right, here is the updated broken wing. Okay, this is correction. It's 65, so it's not in the money. No. So it's 65.90, 65.90, 65, 85, and 65.70. That's why I have you here. There. That's the correct one. 65.90, 65.85, 65.70. I'm looking for $1 or more. I've got it pending at $2. I'm looking for $1 more. Okay, just had a chart alarm go off on Reddit. Reddit is down to support. I think we might have a gap fill trade here on Reddit, either in Newsbreakers or Pinch. Let me check. Newsbreakers. Reddit, we have a trade 250 debit, 165 by 170 hasn't filled. That expires in a couple weeks. We haven't been filled on it. So maybe this one fills. If it does, that hopefully is going to be a bounce off this 200-day, maybe a gap fill. See if price can stabilize from there. Yeah, well, you would have seen if you did the numbers before, it would have been here. I'll show you that would have been like Chris's price is not at all what it says. If I did the 66 If I did the butterfly that I typed in incorrectly, 66.90, and then 85, and then 70, okay, that's offering you a 425 credit. So obviously that's not what I took. I'm looking at a pending $1, $2 credit. I need price to come back and fill me. Getting here for four and change. You're like, well, this one kind of is nice. I can get a profit trap plus $4 credit, right? But price has to go up. So that's not the trade we want. I'm sliding this out of the way and below the expected move, right? Below the expected move. Okay. So daily profit looking good, up 10, $15 already. Um, I don't mind going after, again, like not trying to be a hero here, but this may end up being like a pretty good trade through the morning where if we can get this thing for like 55 cents, 50 cents, I'll probably just take the profit. I feel like with this type of volatility to VIX at 21, I'm not trying to be heroic here and go after a full day's profit. If I get 50 cents, that's a great winner for daily profit play. Even 60 cents is a great win for daily profit play. Give me 1 second. Okay. All right. So if price stays inside the blue levels, this is good. We want price to stay above this bottom around 6,600. We want to stay below 67.45. So far, a little push lower, a little stabilization. Let's take a look at where we are at. Did we hit the 50-day? You know what? I think we're getting closer. I think we actually hit it. Oh my gosh, you're right there. It's right there at the 50-day. Did the SPY hit it? Got to zoom in. Technically not hit yet, but it's right there. Qs. Qs haven't hit it yet either. So, all right, let's see if the 50-day offers some support. VIX is retreating a little bit up to 21.6, now down to 21. Maybe, I mean, that'd be good. That'd be good if we can contain the VIX and, maybe get back to settle in below 20. That should give us plenty of confidence that our trade's going to work out nicely today. Okay. Still up about 15% on our daily profit play. We just need some time. 50-day, let me get the numbers here. 50-day moving average is sitting at 66.60. The day is not done. So nothing to celebrate yet. Keep an eye on that VIX. Okay, let's see if the VIX goes to like 22. So there could be some more pain today if the VIX is going to continue to make higher highs. So hopefully it's not going to do anything too crazy. So VIX at 22, VIX at 24. I'm just going to throw it out there. Like when this thing runs, it can run pretty hot, especially when there's no vol suppression, sub 20. But we also are long the VIX. And this pays really well. Like the VIX trade that we took here, I'll throw we did this from crash insurance, and this is a bonus trade I took here in the daily profit play sessions. The VIX, okay, right now we're up about $50 I'm not taking profit on that, but I'll show you the analysis here. So if we see another big spike up in the VIX, break even on this thing, we're above profit right now, which is good. Um, I'm talking about like if the VIX is running into 30 plus, okay, 30 plus VIX. I know this doesn't show like the live P&L. I guess I can somewhat replicate it. Let me try to go option strat here. Let me build out I did a synthetic, so I got to find long synthetic. And I did a 17 by 17. So 17, 17, 16 to April 15th. So let's go VIX. April expiration. And we did a 17 put, 17 call, and then I bought a 16 put to define the risk. There we go. All right. So right now, I mean, that's the good thing is if we have like a crazy VIX, then we get paid a lot of money. I think our risk was like $300 or $500 total risk. And if we see the VIX spike into the 30s or 40s, it's not going to be fun, but we'll be up, about $1,000 or more. Let's see what this looks like in real time. That's the nice part is even now, because it's synthetic long, it's like owning the VIX. So it's not like a call spread, like a bull call spread where you have to wait for some time and you got your break even way out here. It's like we're essentially long the VIX right now. So if we get the VIX into the 30s, we're going to see like 200% return. We get into the 40s, 50s. We have another crazy volatility event, 40, 50, 60 VIX. A $500 risk can pay $1,500, $2,000. There is no cap, but if it's there, it helps. I mean, if I could hedge and grab $30,000 to $40,000 in VIX profit, I'm not going to be upset. I will be annoyed with how painful it's going to feel with everything else, but I'll also sell some premium. So anyway, we'll figure it out. It's the market rolling over a little bit is not pleasant, but we're also coming into some pretty key support. 50-period moving average should help. Prices are stabilizing right now. So I mean, after the market makers let things slip yesterday, it's kind of good that we have a solid fill, and we might actually have today be a market maker day. And if it's a market maker day, then we should make money. Can you explain what that means in 50 days? Yeah, it's just the 50-period moving average. So I have a 50-period exponential moving average on my chart. I have been talking about this moving average for weeks, pointing this out as a potential correction spot. So as the market was above it back in May, it actually, I don't know the exact count, but I do know that the historical count ever was 128 bars. 128. So from this break of the 50-day, which is right down here, we broke above it, and this bar count was 132 bars. So once we got to 100 plus, I was just very cautious of like, look, price is probably going to pull back and find this 50-day. It just doesn't go that far above it. It doesn't go that far away from hitting it. And as soon as we had this little inefficient melt up move, was I not pretty cautious? I was. The price was inefficient. We pushed 300 plus points away from it. I thought, what a perfect time to fall back to it. And it did. Okay. But now that we've found it, question is, will this maintain the integrity of this bull market? Because the 21 period was acting as support the entire time. The 50-day is obviously a good support zone. Okay. I will share something with you. I am working on a dashboard that I wanted to, it depends on our team to get this to me. But I'm trying to get the guts of it so I can showcase it. But I'm building out basically an income grid that I can kind of fully automate my debit spreads and credit spreads. And to do that, I'm using, like a macro dashboard, which is if prices are aligning up certain ways with moving averages and combinations, we're focused on buying only. If we have an indecision zone, we have a buy zone, we have a sell zone. Okay. So basically I'll give you like the drawing version of it. So if price is, greater than the 21 and greater than the 50, I'm talking about moving averages here, right? If we're above the 21, above the 50, mainly the 50, then we would be in a bull market. So let me highlight this. I will say in green. And this will be like my dashboard look. It'll, look all nice. And then we'll have some grids to give us income opportunities where my scanner will be tracking real-time option prices. And I'm looking for one-to-one credit spreads or one-to-one debit spreads. Okay. So again, I'll explain. In fact, I think I can just, I don't know. I'll show you. You want to see the secrets? It's not a secret. Let me just show you. Give me a sec. Okay. So this is what I'm building. So I'm putting in a risk management overview, which keeps us in the direction of the trend with the path of least resistance. So if we see that price is above a 50 period moving average and price with that 50 period is also greater than the 144, then we're in a macro bull environment. So my strategy focus is going to be on SPX, XSP, SPY, QQQ, and I'm only going to focus on buying the dip. So we put in levels to position for one-to-one trades, debit spreads, credit spreads, because look, I take plenty of risk with daily profit play. I take plenty of risk in broken butterflies. So I want to do an income trade where if we are able to buy the dip, we're getting good fills. So I'm looking at like a 250 credit with a $5 profit, right? So 250 credit, make 250, 250 credit, make 250. If I want to take a portion of that, that's fine. But I want our fills to manage risk. One thing I've known this for years, obviously teaching traders for all these years, but I will say that trading options and teaching a lot of traders here in the last year plus with Prosperity Pub, there's something, and I've got a room of 150 to 200 people sometimes. Is it true that when you lose a trade that is far bigger than what your typical win is, do you like that? Because most traders don't. Right? Most traders, if I'm going to make $100, but if I lose, I'm going to lose $500 or I'm going to lose $1,000. How does that sit with you psychologically? Most traders don't have I'm just going to say the resiliency to take losses like that and then just show up and trade the next day, and show up and trade the next day, and show up. Most traders don't like that. So I'm going to fix it. Okay. And again, there's nothing wrong with it because I make a lot of money. I make a lot of money acknowledging that risk still allows me to make money. That type of risk with high probabilities, you still make money. Okay. But I get the psychological aspect. I get the loss aversion, which is a very real phenomenon. And so when traders, make $100, they're super happy and they win, I don't know, let's say 45 trades, they win $50 to $100 and they love it. They're like, Chris, this is the greatest thing ever. And then they take a loss and they lose $1,000. And the first thing to think about is not the 45 winners, but the one loser. And that's all they focus on is now I don't want to lose. Now I don't want to lose. So my point is, if we make the losses manageable and, make it kind of a one-to-one, you take losses like a champ. You're much more in the camp of like a loss and a win feel about the same. I think you just kind of build up the emotional scar tissue to be a more resilient trader. So this is what I'm building. Does that make sense? Yeah. So like I said, there are, and I teach this a lot. This is a way to make money in the markets. I've shared this grid many times. You should be optimistic. Okay. If you are a trader, I don't care what strategy you deploy. I don't care what service you're in. If you are a trader, there are 4 quadrants for trading. Okay. Some of you may have seen this, but there's 4 quadrants. And you have a low to high reward to risk. Okay. So either we have very low reward to risk or very high reward to risk on this side. And then we have a vertical axis, which is a win percentage, a very high, very low win percentage. Does that make sense? And somewhere you all fall in this grid. You're in this quadrant somewhere. So how can we make money as a trader? As a trader, we can make money doing this. If you have a high win rate, even though your risk reward is backwards, you can still make money. I do this with daily profit play. This is why we win 90% of our trades. We have to. So our break even is around 82 to 83%. So that little 7-8% edge we carve out makes us a lot of money over the course of hundreds and hundreds of trades. Okay. There's a reason the portfolio is up like $70,000 since inception, but we've taken losses along the way, and those losses have all been bigger, but we've still made a lot of money. It's a great strategy and it's super high probability. So you trade with a lot of confidence, but what you sacrifice is you don't have high reward and low risk if you're trading with a very, very high probability strategy. So you can still make money, but you got to have the courage to trade through it. Okay. You can also make money here if you have a super high reward to risk and a very low win percentage, not necessarily like low, but I'd say, my lowest win percentage in my services is double ups where I'm winning about 58 or 59% of my trades, but my winners are way bigger. So when my average winner is, 125%, 150%, and I'm still winning over 50% of my trades, that is pretty great. But if let's say that I was winning 40% of my trades, okay, you've possibly seen the math here. If you win 40% of your trades, but your average winner is 2 times bigger, you're going to make money. Because if you win double what your risk is, you only have to win 33% of your trades to be break even. So if you're winning 40%, you're making money. You win 45%, you're making money. You win 50%, you're making a lot of money. But you have to set up that trade where it's a higher reward to risk. Okay. You can also make, this is where I think it's the sweet spot for trading. If you have a higher reward to risk and a reasonable, I'm not going to say super high win percentage, I'll just say reasonable. Okay. Let's say I win 55 or 60% of my trades, but my average winner is 1.5 times, 2 times. That is a good multiplier for your gains. Mathematically, this is where most traders would love to find their strategies, or at least have a strategy that does this. In my opinion, this is what my double up is. My double up is we're winning about 58% of our trades with an average winner that is like 1.5 to 2 times larger. So I don't win 90% of my trades, but I win most of them. And the reason I win, 58% is because some days I choose one trade, and other times I literally trade the highs and the lows, and I just take the winner. But the winner is much bigger. But you can mathematically make a lot of money here if your winners are bigger and your win percentage is decent. Okay. Where you can't, this is the only spot you can't make money. And if you assess your strategies, and this is where you are at as a trader, where you have a terrible reward to risk, where your losses are way bigger, and also your win rate is low, then you're not going to make any money. But there isn't a single service that I teach. There's not a single strategy that I trade that is in this quadrant. So if for some reason you are not making money, it is time to assess what strategy you are trading and how you need to prepare for it kind of emotionally. Are you trading a strategy that has a super, super low risk? Okay, and high reward, then you probably have a low win percentage. That's usually the trade-off, right? Options is never like, oh, there's a crazy bias, there's a crazy edge. Your edge in the market is the markets are bullish most of the time. Like literally over the course of a century, we've had bull markets 80% of the time. That's a great edge to know. Just be bullish. In the long run, you're going to be fine. Also, day to day and week to week, we tend to have 54 to 55% of all days, 54 to 55% of all days and all weeks are bullish. So you have a house edge to be long, which is why when the market's rolling over, it's not about, I need to be short, I need to be short, I need to be short. No, what you need to do is manage risk. Manage risk, have some hedges. Okay. But if you are not making money, assess your strategy. If you have multiple strategies, assess your strategies. But somewhere in here, either low risk, high reward, or I'm sorry, I guess it's over here, low risk, high reward, great. It still makes money. Okay. High win percentage, but lower reward to risk, you still make money. Combination of the two, it's a great spot to be. But you can't have a low win percentage and have a high risk trade. That's usually not going to do well. Does this make sense? So I'm just saying that because this is real. This is what trading feels like. I know what loss aversion feels like. I have, I've done it myself. I've done it in strategies in the past where I've thrown things away. But simplifying it in terms of if it's reward risk based and if it's win percentage based, you're trying to find somewhere where your strategy is going to fall. So anyway, you see the write up here. This is what I'm doing. I'm building a macro dashboard where it gives you the path of least resistance. If we have price staying in a bullish market, we only focus on buying dips and we want good price fills. I'm not looking for backwards rewards risk. Indecision, and this is very real on a higher time frame. If prices are not giving us the right confirmation, we wait. We should wait. Bearish, if we roll over, it's pretty aggressive. That keeps us out of the market. If you don't want to be bearish, you don't have to be bearish. But in the short phases that the market does roll over, we have a ability to trade bearish. So what I'm looking for, spies and Qs, SPX. I also have a VIX. I'm getting a VIX feed on this as well, and anywhere between 50 and 60% of the trade. So if I'm going to do a $5 wide SPX trade, I want to try to get that for like a 240 or 250 debit. Or I guess I'd say I'm willing to take like a $2 credit or 250 credit. So I'm looking to reduce the risk a lot versus what we typically have to take here with daily profit play. So anyway, I'm building on this. The dev team will have hopefully some guts to me in the next maybe couple of weeks, but I'm really excited about this. And this is something I'm essentially going to fully automate, where it'll just give me the trades in my dashboard, tell me what is good, what direction we're trading, and what levels to take. I can put the trades in every Monday for the weeklies. I can put the trade in every monthly expiration for the monthlies. And if I want to be really passive, I can go out quarterly. And you can see that most of the time we can get some great trades. Cool. So anyway, hopefully that is going to be something by either end of the year or early 2026. But it's, everything with Dev, you're kind of on their timeline. They've got the logic. I've sent them countless videos, and I'm just working with the team to figure out how we can get it polished and delivered in something that's really easy to use. So we'll keep an eye on that one. All right. Back to the day, 2146 VIX. We're not up at the highs yet, but we're close. VIX is still getting elevated. Let's go current price. We did make a fresh low. We got to be really close to that 50-day now. Okay, I think we've officially hit it. I think. Yep. So, all right, the 50-period moving average that I have been talking about ad nauseum is finally hit. So let's see if that actually matters today. Okay, and the reason why I say, if it matters today is because when this thing dropped on October 10th, the 21 period didn't matter at all. It cut right through it. So obviously today is going to be important to see, like, does the market care that this is here? We've had about a 3% correction to get there. So does it matter? Let's find out. Hopefully it does. Right? If it does, we'll see some stabilizing today. If it does, we'll see some pausing here, maybe some green, maybe some chop. Maybe today is, after the markets let it slip 60 points yesterday, maybe today, despite the gap lower, is going to be a market maker type day, which obviously I'd love to see that. Okay. And the reality is, as long as our daily profit play makes us money, we're doing our job. That is our job. Okay. Rob, which service? It's going to be, I don't know what the name is. I'm calling it income grid. So I don't know if we run with that officially, but I'm calling it income grid, because basically when the market is, in a buy zone, here's kind of what it's going to look like. If we have the market, let's say this is live price. Okay. Every Monday, I can set my grid and trade the house edge. Okay. So I can trade my grid. I'm going to max this at 4 trades. So even if we have a down week, okay, I'm going to give myself enough time to go out, not just to Friday, but the following Monday or Tuesday, and see if the market can bounce back up. Okay. If we started out here for a monthly expiration, I'm going to put my grid trade in 4 levels. We can go up, you can go as many levels as you want, but I'm going to go maximum 4. And for a monthly, if you give the market a month outside of maybe a couple of weakness windows, if the market's generally in a bull market, it's plenty of time to see prices. This trade gets filled, a little stall, maybe a little pullback gets filled, and it goes back to all-time highs or whatever it is, right? So monthlies, on average, if we get like 1 or 2 trades filled, on the weeklies, get 1 or 2 trades filled, even 1 trade filled. But remember, the house that you're playing with is 80% of all years in the markets have been bullish. Even through bear markets, even through the greatest financial crisis ever, which we might have. We had the .com, we had the great financial crisis. We might call this the greatest financial crisis if we have one. Okay. We have some crazy tools and resources that would probably try to prevent recessions, which we've been doing now for over a decade. COVID was an anomaly, but we didn't let COVID stop us. We just ballooned the deficits. Anyway, point is 80% of the years, you'll go back a century, most of the time the market's bullish. 55% of every day and 55% of every week has been bullish. So I keep talking about this house edge. If you go to a casino and you know that the casino has a 56 to 58% house edge, you would never, ever gamble, right? Because if you play long enough, you are going to lose by design. If you trade the markets, the house edge is to be bullish. If you trade long enough, you should be making money if you are bullish. Okay. That is why they say time in the markets is more important than timing the markets. Okay. So this would be a combination. I would look at SPY and QQQ with debit spreads because I want to make sure that we avoid assignment risk. That's literally since day one. I mean, I've been teaching options now for 7-8 years, but coming into Prosperity Pub for the last year plus, a lot of people are like, credit spread and SPY. Oh my gosh, assignment risk. What about assignment risk? You only have a 7% chance of assignment. Okay. If you're doing a debit spread, that reduces that to like less than 1%. So we should have like very, very, very little risk of assignment. So we're going to do debit spreads on SPYs and Qs. And then also on the SPX, we can do either one. Okay. Credit or debit spreads because there's no assignment risk and it's cash settled. So it doesn't really matter. Does that make sense? And we can trade Russell, we can trade Dow, we can trade stocks if we want to, but this is my preferred way to do it because we're going to decrease the volatility. Stocks are way more volatile. Okay. Way more volatile. Indexes, because it's the basket, you reduce volatility. It's the bigger picture. If the broader market is stable and the broader market can find bullishness, this should be the path of least resistance going up. Why debit versus credit? It's not versus, it's just either or. Okay. Why do I do debit? Because I don't want an assignment risk. Okay. And we can do credit or debit because there's no assignment risk. Okay. Why do I like credit spreads? Well, why do I like credit spreads? Time works quickly for us. Okay. A debit spread, you actually have a higher break even price than a credit spread. Correct? If I like today, if I did prices trading at 66.84, if I did a 66.85 buy call and a 66.90 buy call, I'm sorry, sell call, and the broker says you have to pay I don't know, $3 debit. Or let's say they say it's $250, whatever. What's the price? Somebody price it in right now. What's a 6685 by 6690 bull call spread? Tell me what the debit price is. Or make me go to my broker platform. Okay, SPX for today, 6685 by 90. Broker says it's going to be 240. Okay, 240 debit. Okay, so if I did a 240 debit, my break-even price is 6687.40. All right. Now, if I did a 6685 sell put and a buy 6680 buy put for a credit spread, it might give me a little bit less. Let's find out. Let's put this over on the put side. If I do the 85 and 80, I get 210. I mean, I might get 230, 240. It's close. Okay, let's say we get 220. I'll just say 220. I'll take less. I get a 220 credit. 220 credit. But my break-even price is now 6682.80. Yes or no? So what break-even would you rather have? This is why I personally prefer to take credit spreads when I can versus debit spreads, because my break even is a lower price. On an index, it's going to cost me about the same price, whether it's risk reward. So if I can get this to, this one's a 250 debit. If this is a 250 debit and this is a 250 credit, my reward to risk is the exact same, but my break even is 250 lower. My break even is 250 higher. That makes a difference to me. Right? Shit, I did that. You're right. 6682. I said it out loud and typed it in incorrectly. 6682.80. Okay. See the difference? So if I'm getting the same fill, whether it's I'm paying 250 or I'm getting 250 credit, my risk is the same. But if I can have a 250 less break even, I'm kind of happier with that. That makes sense? Type in a wire yes, so that makes sense. Type in clear if that's crystal clear. That's why I would prefer to take credit spreads. So why would I do it? SPX, it doesn't have assignment risk. It's cash settled. But if I could decrease my cost basis or decrease my break even, I'd much rather have my line in the sand be lower price if I'm trying to look for price to be bullish. Okay. So that's why. But I get it with SPY QQQ. The reason we would include those instruments is because they're typically in a week-to-week basis. They're like $1 spread, so you could be much tighter to risk. So you can take a trade where it's a 50-cent debit, and I'm risking 50 cents to make 50 cents. Cool. Right? And there's little to no assignment risk. SPX minimum is going to be $5. What's the benefit? There's some great tax benefits at SPX. Everything you trade in SPX is automatically a mix between 60-40 as if you're a full-time trader. Tax purposes, if you have full-time trading status, then you get like a 60-40 split on all capital gains. So it reduces your tax burden to about low 20s. Obviously, long-term capital gains at like 15%. I'm hoping that's going to stay there or at least go down. I have no idea. Honestly, it's like even if taxes go up or go down, it's like I just trade. You can't escape Uncle Sam. They're going to come for it anyway. So just trade, just make money. But SPX is a pretty good mix where rather than paying like 34% capital gains tax on everything short term, especially with option trading, SPX is 60-40, which lessens the burden to about a 21-22% tax hit, which isn't too bad. Okay, is this fair? So anyway, that's income grid trader. I'm going to try to do this. So like I said, a lot of this would be dashboard based, live market feed, live option prices, and then basically green light the trades. If we're in a bull market, we're looking for the macro dashboard to be bullish. It green lights the trades when they're hitting my credits or my debits that are the levels I'm setting based on the rules. You can obviously take less credit. You can obviously pay more for the debit, but that's not what I want. I want this to be offering dips with us where if we're doing a debit spread, it's going to be slightly in the money. And like in the SPX, it has to be in the money by about 10 points, 15 points. And if the market finds a low and we carve out that for the week, we're going to make some good profit. Okay. Let's see here. Meta trade at 220 is getting close. David, we already took the trade, man. I got filled at 240 on Meta. I'm in the trade. So it's a December expiration. That was a bonus trade. I got filled for 240. So my risk is 240. My reward is 260 if it gets back above 615. Okay. All right. So little sneak peek there. Yep, same. Little sneak peek on, again, name pending, but income grid trader, something along those lines. And what I'm going to try to have it for is I'm going to focus primarily on weekly and monthly. Okay, I'll focus primarily on weekly, but I like the monthly option as well if you want to be a bit more passive. And then I really like the quarterly. I think it's very passive, but for me in managing accounts, that's a great way to kind of position this. And then you can supercharge it with daily. Okay. Personally, I'm probably not going to sprinkle in the dailies because I would not do a 0 day with this. I would probably do like a 1 or 2 day and kind of sprinkle it out. Like, okay, if I traded Monday, I'll do like a Wednesday expiration. If I traded Wednesday, I'll do a Friday expiration. I want to give myself a couple of levels, but you can set these all up in advance, which is kind of nice. So daily is going to be active. That's probably, best if somebody I'm not going to trade daily. Like personally, I already got double ups. I've already got daily profit play. I'm active every single day. So I'm going to stick with weeklies, monthlies, quarterlies, which is plenty of action, plenty of good trades, plenty of house edge. And also we can trade this thing up or down, right? If we're in a bear market, we'll be bearish. If we're in a bull market, we'll be bullish. If we're indecisive, we can decide to be cautiously bullish. We can stay out, wait for some confirmation. Okay, good stuff. Meta trade, it already got filled, Rob. It was a bonus trade. You obviously don't have to take it if you think Meta is going to continue to drop. But let me go back to my charts here. So here's my daily profit play. Things are great. Things are looking great for this morning's daily profit play. I mean, we've had a nice choppy morning. It's already been 40 minutes into the trade. Our daily profit play right now is up a couple of bucks. Should be. We're up 25 to 30%, 20% right now. If I was trading multiple contracts, I'd probably just take the profit. But I'm just trading small right now, and I'll let this kind of work its magic, and hopefully we are way, way out of the way. And let's go back to Meta. Meta is at 608, 607. This trade is out to December, so I am giving it time to find some type of stable move. I took the low to high. We're trading right around that 50 to 61% zone. I am hopeful that technically this gap fill will offer some demand and support. So if we can stabilize in here and find our way back up into some type of earnings gap, then we can make from the 240 debit. If price is back up, I could sneak in and try to go for a $5 credit, which would be my full reward. But even if I do my portion, I'm just going to put in a 360 credit. That's a 50% return on my risk. So all price has to do is get back above like 615, 620. We'll be okay. So I'm looking at this level. It's a 50618 fib zone, a little retracement zone. Does the market stabilize? Try to claw back some of this earnings gap. If it does, great. If Meta goes all the way down to the lows again and we take out the April lows, then I'm going to risk $240, which is totally manageable. It's annoying loss, but it's manageable. Like Meta can go from literally $800 to $450, and I'm only going to risk $240. So that's the trade, and it's out to December, so there's plenty of time. Let's see here. Took the daily profit trade. SPX also did it on SPY. Trap on SPX SPY, trying to make up losses. What losses? I mean, I don't think they're my losses, right? We haven't had a lot of losses, man. We've had a good week. We've had a nice couple of weeks. Had winners this week. Daily profit play, double ups have been great. Waterfall week, 7 trades this week. So yeah, I mean, if I can help you grab profit, man, do it. But we don't lose a lot. Okay. Okay. So here's what I want to do. I'm going to switch gears. We'll sit and watch daily profit play. Things are looking good. I'm spotting this on the other chart. So as long as prices just kind of get contained, we should be hitting our profit target pretty soon. There we go. I mean, our debit is now trading for about 60 cents. So we're up like $40, 30, $40 right now. I'm going to try to go after 45. I mean, again, I could be greedy and I can say like, I'm going to hold this thing all the way, but I don't know. I mean, we could definitely fall. I don't want it to. I don't think we will for a Friday. I think price is going to be a market maker type day. All right, here's the deal. I'm going to hang out and I'm going to go through a session with you. We're going to kind of prep for next week. I'm going to put in a 25-cent debit. You do not have to hold this with me. Okay, I'm just trusting the process and watching it actually on my other screen. So if this is going to stay here while I'm talking for the next 30 to 40 minutes, I want to see how much time decay I can still get out of my trade. Okay, we're at the 50-period moving average yesterday. It was not a market mover win. It was a win for us, but not for market makers. So I'm hoping that they will contain prices today and give us our levels are looking pretty good, right? Like if price stays below this line, above this line, time decay should continue to give us more and more profit on daily profit play. Okay. Do you explain how the butterfly trades make money in member area? Yes. If you're in my double ups, we've spent tons of classes on butterfly spreads and iron butterflies. I even give you a butterfly video. If you can find it here, I'll try to find it in my Telegram. It's going to be back a couple weeks, but I'll find it. Let me see here. Let me search inside this channel. Here it is. Is this it? Butterfly spread. I'm looking for I have a video. This channel's not busy at all, is it? Butterfly. There we go. I know Deanna did a trade of the day with my butterfly. I think I have a video for like a 5 or 10 minute video. Let me see if I can find it. Going live, broken wing butterfly. Aha, here it is. Have you heard of the broken wing butterfly? This is broken wing butterfly that I did a video on. I shared a bonus trade that ended up being like 90% profitable. I think we took the profit. It was $1.35 credit. We closed it out for like 30 cents. We've had some that we took $1, $20, $30, close it out for 5 or 10 cents. So anyway, I'll share this if you want it. So this is a broken wing butterfly, and I'll share it here in my Telegram. So hosting for education review. Right there. That's broken wing butterfly. And the difference between a broken wing is, think of the broken wing butterfly like a credit spread that offers a profit trap at the very end. So I still use a broken wing to call the top or call the bottom, but it has that potential profit trap if I'm trying to call the bottom or the top. Like today, for example, okay, if price is going to fall to my calculated level, like we're at where VIX now has retreated from like 22 down to 20.76. I think this is also a good sign that today's price action will be somewhat contained for now. Obviously, I don't know if the VIX is going to stay here, but hopefully it does. So our bottom today that I calculated around 6,600, if I put a broken wing butterfly here where I do we're already there for daily profit play, but just hear me out. If I did a buy 6,600 put, sell 6,595 put, and then I skip a strike and do a buy, so this would be buy the 6,600. Okay, that'd be a +1. So a buy put. And then I do a 65.95 with a -2. It's a sell put with 2 contracts. And then I skip a strike and I go 65.85 with a +1. So all this is doing, and this is what the video is for, is it's showing you that all you're doing is really combining a bear put debit spread, which is this. Okay, if you take one contract and one contract, that's a bear put debit spread. If you take one contract and one contract with these 2 trades, okay, the 65.95 sell and the 65.80 buy, that is a wider credit spread, right? So you have a 5 wide debit spread, and then you have a 15 wide credit spread. So the wider credit spread is your risk, but this serves like I've got a wider credit spread that finances my debit spread, but my debit spread also offers a profit trap. So broken wing butterfly looks like this. If I call the top, as long as price stays below this, I pull in my dollar credit. I have potentially my $5 profit trap here. And then if price goes another $5 past that, I take on my risk. My break even would be $6 past this price. Okay, so I use broken wings to call the top and bottom. So that's why I put them at levels where I think the bottom and top are very safe. You can still take a credit spread, but you're going to take on a bit more risk. At least the profit trap is offered up with a butterfly spread. Okay. All right. Anyway, there's a video lesson if you want to check it out. And for the normal butterfly spread, which would be, hey, I think price can come back and fill today's gap. Well, then I can put a butterfly spread in here where it's going to be the same equidistant trade. So I could do a 67.20. Let's say I sell my two contracts there, and I'll go 67.35 on the upside, and I'll go equidistance. That's 15 wide. So 67.05. These numbers make sense? So if I buy the 67.05, sell two at the 67.20, and buy the 67.35, that creates an equidistant debit. And that's going to be a very low risk, high reward trade. That's going to be like a double up trade, butterfly spread. So I'm not going to take this trade, but I'm curious if we do fill the gap at 67.20, it's probably very cheap. I'll show you. 67.20. If I do a butterfly spread and we end up hitting 67.20 today or close to it, how cheap is this trade? If I went 10 wide, yeah, so I could pay 80 cents to make $9 and change. All price has to do is gravitate up towards that 67.10, 15.20 zone. If it happens, that should be that's a fat profit. I'm risking $80 to make potentially $1,000. If I go a little bit wider, it's going to cost more. Cost me $1.50, but I can make over $1,000 on this trade. That's low risk. That's high reward. You're setting a profit trap. That's double up trading. I do that in double ups. I've taught the double up service for, about a year or so. But I love when we pivoted to double ups focused on butterfly spreads, I've loved the service. To me, it's one of the lowest risk strategies with the highest reward. And I use my gamma levels every single day. And that's been really, really helpful to pin some of these trades and get, high probability profit traps. I don't want to hold them all day. Like you saw yesterday. Yesterday was a good example. I placed that trade in the morning. We started out right here in the opening bell. Opening bell is here. I put a profit trap right there with double ups, and price went down. I took profit. It went down again. There was more profit. Okay. It went down later in the day and came back. It was more profit. Like this was up about $50. That's where I took profit yesterday. This was up about $100. Later in the day, this is up about $400. Later in the day, this was up $900 because my profit trap could have been sitting there all day, and price obviously spent a lot of time in that zone. We had a 20-point wide, we had a 40-point profit trap in here, and price spent a lot of the day in there, didn't it? So that's why the butterfly worked out really well yesterday. That makes sense? All right. So I put this in my general Telegram, not daily profit. Everybody can see this. So if you have you should all have this, but if you don't, here's my like public Telegram. This is my Chris Pulver Telegram. There you go. Most of you should have this. Okay. All right. What I want to do now, I'm just going to watch this price action on my other screen. We're still watching daily profit play here. It's up about 30, $40. Okay, fine. Next week. Okay, next week. This needs to be updated because we just closed out some winners this week. We have officially closed out for waterfall income. For waterfall income, we've closed out our 101st winning trade. So 101. So this technically would be our 102nd win. So obviously this is a little bit old. And I've had 93.5. So I'm editing this. The team can take it back and do what they want with it, but this is where we're at. So of live trades, 101 winners, we have won 93.5% of our trades live. No back tests, all live trades, 93.5% trades winners. We have 101 of them. It's done pretty well. Okay. Monday, Monday, I'm going to do a 11:30 a.m. masterclass, or I'm sorry, 11:30 a.m. trading session like we do every week. And I'm also going to host a couple of masterclasses next week. We'll get those on the calendar. Okay. All right. So I want to run through this. I'm still watching my daily profit play in my upper screen. So I'll keep an eye on that real time. So anyway, that's the deal. There's risk in trading. We know it. Every trade I take is live. We've had 101 winners, but we're talking today for the demonstration purposes and educational purposes. We're talking about a 5K risk, which obviously you don't have to risk that much money. You can risk way less than that. Typically, my risk is anywhere between $500 and $1,000. I risk generally pretty small, but I take these trades very often. Take them usually every week, almost like every week, guaranteed. It's been really good. Okay. Point is, we've been doing this for just over a year. All right. And we've logged 101 winners. So I technically have taken more than one trade per week. But the markets. I think this is one of the most flexible strategies I can teach. Also, this could be pretty straightforward as far as, a simple service to get you involved with some options. There's a strategy one that's very simple. There's a strategy two that's a bit more advanced. I'm happy to teach you both because I want you to know it. Okay. All right. It's trading. So we know there's going to be losers, right? No, nothing's perfect, but the edge in the market, as I say, you got to know this stuff. You stay in the market long enough, you got about an 80% chance of being right. You just need some time. Day to day, week to week, you have a house edge of 55%. Okay. We are building out strategies that give us the house edge. We're taking advantage of that. I expect to win. I wouldn't place trades with real money if I didn't think I could win. Okay. All right. So appreciate y'all being here. I'm just going to read through this for waterfall income. I've been in the markets this is going on my 25th year. I trade everything: indexes, stocks, options, futures, forex, cryptos. I probably logged more than 20,000 hours, honestly, trading and teaching over the years. So I've seen a thing or two. We're going to see more things or two. I don't know what 2026 looks like. I am quite cautious. I'm not bearish, but I'm quite cautious. I think that we have to have some downside protection. I think we have to take some risk off the table. I think we need to, lower our exposure a little bit or trade some non-correlated assets. Anyway, but what we are seeing right now is kind of where we are going is it's a K-shaped economy. And I know that like there's the haves and the have-nots and the K-shaped, but even the stock market is performing like a K-shaped economy. If you take the SPY versus the RSP, they're diverging, right? We just hit all-time highs like a week ago in the SPY, but we've been down 3, 4, 5%. And here's the difference: the S&P, like that, so the SPY, which is market cap weighted, was up over 17% at one point this year. It's leaked a little bit these last couple of days, but we're still at like 13, 14% for the year. The RSP, which is equal weighted, is only up like 4 to 5% for the year. That's a huge divergence between broader market and narrow concentrated Mag 7 market. So on top of that, you throw in governments and deficit spending. China's doing it, Europe's doing it, the US is doing it. Inevitable outcome: we are trying to convince ourselves that we can grow our way through the problem. And it's great in theory. I just don't know if it's going to be the reality. So will we have a second wave inflation? Do we have hyperinflation? I do think that the Trump administration will probably pivot if we're going to see some type of hyperinflation, because you will absolutely lose every election. Like, nobody is going to keep you in power if we see hyperinflation. So, but I will say that for the last 5 years, every household in America, haves and have-nots, know that inflation is very real, and know that inflation is way worse when it's at 3, 4, 5% than it is when we're being told it's sub 2%, targets 2%. Okay.